stock market can always crash. I mean, it's very expensive. And so if it were just to revert to the mean, that's a big crash if it went there quickly. So it's always possible, but it seems unlikely because the Fed can always interfere by creating more money. And so we end up with a dollar crash instead of a stock market crash. And that's what I'm more worried about. Because all the solutions, and they're not quick fixes, but they are solutions and they will work. But they all involve less government, not more government. They all involve, eliminating regulations and taxes and spending that are at the source of the problem. But the natural tendency of a politician, especially the Democrat, is to solve every problem with more government and not recognize that it was government that caused the problem that you're trying to solve with more government. And all you end up doing is exacerbating the problem that you're trying to solve, because the solution is to eliminate government and to allow free market forces to work. Now, free market forces, there's going to be losers. People are going to lose money if the free markets are allowed to function. And so that's what politicians are afraid of, because some of those voters are going to be upset. But the government doesn't eliminate those losses. It just changes the way they're allocated, the way they're distributed, and it changes the nature of the losses. In many cases, the losses are inflation. So instead of losing your money loses loses value, but you end up in the same place. Whether you have less money or the money you have buys less stuff, your standard of living is still reduced. But when the government comes in and tries to paper over these problems by creating more inflation, the distortions that it imposes on the economy do even more damage. And what we need is to allow a complete restructuring of the structure of the economy. We need a lot more manufacturing, a lot more production, a lot more savings, and we need a lot less consumption, borrowing, especially, consumer borrowing. We need more people who are in the service sector to move into a goods production sector. We need more people who are working for government, healthcare, education to be employed in more productive areas of the economy. And so that's a big change that needs to take place. And the government delays all that with their policies. They're trying to reflate all the busted bubbles. The markets are trying to burst those bubbles and replace them with something real, something that's lasting. But the government doesn't want that because, again, in the short run, there's always some pain, there's always some losers. And the politicians, are not willing to accept that because it means that maybe they won't get those votes. Well, there's a lot. I mean, there's a lot of departments and agencies. I think when the United States government began, we had maybe 5 different departments. And these were all added. The last one was Donald Trump added the Space Force. Get rid of that. I mean, what did we need that for? But, we can get rid of a lot of different departments, education, energy. There's a whole host of them that we don't need. Some of their functions can be consolidated into other departments. Like, we should get rid of Homeland Security. We didn't have that until Bush. I mean, why can't defense cover Homeland Security? In fact, that's what defense should be about, securing the homeland. Maybe if we didn't have so many of our troops all around the world, we could bring them home to defend our own country, including the borders or whatever. But the government has to shrink. The government has to spend a lot less money. Just like if you're a household and you have to cut back on your spending, you just look over all the things that you're doing and what can I eliminate? What can I cut out, right, that I don't need anymore? We need to cut a lot of government. Government was very small when, the founders first created the federal government. It was an afterthought, didn't spend much money. There was no income tax. There was no Social Security tax, but there were no deficits. The government was able to pay all the bills on tariffs, on liquor taxes, firearms, tobacco. That's all the government needed. And it was able to pay all the bills and not have any deficit. So we need to have substantial cuts in government spending. But Unfortunately, most of the government spending today is just transfer payments, Social Security, Medicare. And so we have to have substantial cuts there too. And that is the big political problem, because you now have a lot of people who depend on this government money, but the government doesn't have the money. And there's no way to legitimately take it from the people who are paying taxes. So right now they're paying for it by creating inflation. But they're going to have to create so much more inflation to cover these costs that they're really going to impoverish the nation. So what has to happen is we have to come to terms with the fact that the government's promised much more than the taxpayer can deliver, and the programs need to be cut. And there are ways to cut it. I mean, I would like to get rid of Social Security, Medicare completely, just eliminate it, but pair that with a plan for how do we deal with all these people who, paid these taxes their entire lives, didn't save enough for their retirement, in part because they thought they were going to get Social Security, and so they didn't save money that they otherwise would have saved. And now they're in a situation where, but for Social Security or Medicare, they'd be broke and eliminate the tax, so people don't have to pay the taxes anymore. But we have to have some way of funding benefits for people who really need them, and that would only be for a certain period of time, and then so that younger people would know, look, there's nothing there. You just got to save, for your own retirement, which is what everybody did before Social Security. And Social Security didn't even apply to self-employed people until the 1950s. It started in the 1930s for workers, but they figured that if you were smart enough to employ yourself, then you were smart enough to save for your own retirement. But what we need to do is means test the benefits. So, there's no reason for wealthy retirees to receive a Social Security check, because all that's happening is their children are going to inherit more money. And why should the children of poorer parents be taxed to subsidize the inheritance of the children of wealthier parents? So you shouldn't be able to get Social Security until you've exhausted, your private funds, and not just income. If you have millions and millions of dollars worth of assets that you're going to leave to your kids, you should have to sell those assets before you ask other people to cover the cost of your retirement. Because people forget that there is no Social Security trust fund, that all the money that anybody paid into Social Security, they just paid a tax. In fact, it's like an income tax. There's no difference really legally between the payroll tax and the income tax. It's just that the payroll tax is only on wages, and the income tax taxes, capital gains and other things. But it's really an income tax. They're both income taxes. And just because you paid the Social Security income tax, you have no more rights to get that money back than your income taxes that you paid. I mean, that is the legal, definition. Nobody has a claim to the Social Security benefits. The government could eliminate them whenever they want. You can't file a lawsuit. It's not your money. And where the government gets Social Security money from is they get it from the new taxes. So if somebody is, 75 today and getting a Social Security check, the money is not coming from any of the taxes that he or she paid during their life.
For 40 years.
That money is gone. It was spent, right, on the Vietnam War, Iraq War, war on poverty, COVID relief, whatever. The money's gone.
Other entitlements.
All the money that somebody gets in Social Security was taken from the paycheck of some younger guy. And in most cases, the people who are paying the Social Security tax are far less affluent than the people getting the checks. So it's a transfer from the young and the poor to the old and the rich. So that has to stop. And then other people, like, for example, myself, I mean, I'm 61. There's no reason that I should get any Social Security. Right? I have more than enough assets to take care of myself. And so they could just X me off, right? I don't need it. And I shouldn't get it. I paid a lot of tax in Social Security. I'm not paying that much anymore now that I'm in Puerto Rico. But when I was years before, I paid way more in tax than I would ever get back anyway. But it doesn't matter. That money's gone. That money's been spent. And, there are a lot of people that maybe are less affluent than I am that also don't need the money. But it isn't even a question of, do you like the money? Sure. Let's say you're a retiree and you get your Social Security, and so you can afford the dues at the country club. And maybe if you didn't get Social Security, God, I guess I'm going to have to cancel my country club. Well, I guess that's what you have to do, because you can't take the money from a family that can barely pay the rent, and is struggling. And now you're taking that Social Security money. It was a horrible deal to begin with. But again, the public was duped into it. They believed the lies the government was telling them about how this was a big insurance plan, and the government was supposed to take the money and invest it so that the investment returns were supposed to pay the benefits, right? It wasn't supposed to be a Ponzi scheme, but of course it was a Ponzi scheme from day one. The government lied to the public about the nature of Social Security. It was really a gigantic fraud. They tried to make it sound like it was an insurance plan. That's why they call it premiums, beneficiaries, trust funds. But the whole thing was a lie from the very beginning. And it's about time we told the truth about Social Security. I mean, it's too late now, but we should have told the truth decades ago. But now, it's an even bigger problem. And you got an army of people who, they're a one-issue voter. They're not going to vote for anybody who's going to cut Social Security. That's why Donald Trump, he's not willing. No, we're not going to touch Social Security. We're not going to touch Medicare, right?
Yeah, it would scare.
Well, you're not going to make a dent in the deficit. You're not going to take, any significant amount of inflation away unless you cut entitlement spending. If we're committed to not cut entitlements, then we're going to have massive inflation, as far as the eye can see. The big drop was in 2008. I don't think in 2006, and the market kind of bottomed out by early 2009. But yeah, we had a huge rally because of QE1, QE2, QE3, 0% interest rates. The Fed did everything it could to prop up financial assets, and that included real estate. But that did a lot of damage, because what that did was prevented a healthy restructuring of the economy that would have gotten to the core of the problem that led to the financial crisis and a collapse. We didn't do any of that. Instead, we just inflated an even bigger bubble to delay having to deal with the consequences of the prior bubble. But now the disaster that we're headed towards in the future is going to be not only much worse than what we experienced in 2008, but much worse than it would have been had the government done the right thing and not interfered in the process and allowed for an even bigger decline in the stock market, allowed for an even bigger decline in the real estate market, and allowed for a real healthy restructuring of the economy back in 2009, 2010, 2011. Instead, we just made all the underlying problems that caused that crisis much worse, which is why the next crisis will be even worse than the last one.
Yeah, I mean, we could change the pay structure so that, to the extent that they are under budget, that they can get a bonus of a certain percentage of that budget so that they're incentivized. But, the key is just to limit what government
just
can
do a good job.
Well, they're not going to. I mean, it's hard to
be good stewards of the money.
Yeah, but they're not going to do that. They're politicians. I mean, that's why you really have to limit what they can do and what they can even spend money on, which the Constitution was written to do. It's just unfortunate that it's no longer enforced, and the government gets to do all sorts of things that are not authorized by the Constitution. But if the government just had a lot less money, then they'd have to spend less. And there should be a requirement, I think, at this point, that the budget be balanced. So if
a balanced budget?
Yes. So if there's something worth paying for or worth doing, then you got to pay for it, right? And if you're not willing to pay for it, then don't do it, right? Because the voters they'll take whatever they can get that's free. So if you promise some new program and the cost is zero, but there's some type of benefit, well, then fine, I'll take the benefit. But if you say, no, there's a cost and a benefit, here's the new program, and here's how much your taxes are going to go up to pay for it, then a lot of people might say, you know what, I'll do without it. Forget about it. Let's not do it. That should always be the choice. It shouldn't be, we're going to have this new government program and it's not going to cost you anything because we're just going to borrow the money and we're just going to,
because no one cares. And, nobody sees the relationship between the borrowing of the money and the inflation that comes down the line and how that impoverishes them anyway. I mean, the inflation tax is how we're paying for all of the government spending that we're not paying for with taxes, because we have to pay for it somehow. We don't get any government for free. The only question is, how do we bear the cost? And it's actually cheaper to pay the taxes than to suffer the inflation. Inflation taxes is actually worse. Well, yeah, money supply really started to blow up in the 60s. That's why we had the high inflation of the 70s. In the 1960s, gold was $35 an ounce. Now it's $2,400 an ounce. So that's a reflection of the inflation that has been created. Of course, not just gold, but the stock market, real estate, everything is a lot more expensive now than it was in the 1950s because of inflation. And that's just going to get worse. The pressure on the politicians to create inflation is much greater now than it was then. And they're doing it in an economy that's far weaker, because in the 1960s, we still had our manufacturing base. We were still a net exporter of manufactured products. America was still the world's largest creditor nation. Now we're the biggest debtor. Now we have $1 trillion a year trade deficits. We had a lot of savings. Americans, saved money.
They made money with their money in the bank.
And when they bought stuff, they weren't using credit cards. Most people who bought a car didn't take out a car loan. They paid for the car. The only real debt that you had back then was a mortgage. People wouldn't have borrowed money to buy, appliances or to take a vacation or to buy gas or groceries the way they do now. I mean, now it's just a gigantic credit bubble. So the potential for severe inflation is much greater than it was, at any point during, the 70s or the 80s or the 90s. And we've already seen that. I mean, the inflation that we've experienced over the last few years, if we measured it the same way we measured the 1970s inflation, if we had the same CPI, we would see that we actually had worse inflation during than any of the years of the 70s. And even now, where it's pulled back to around 3.5, if we measured that properly, it's more like 6 or 7, which is still very high. I mean, people want to wonder, why is Biden so unpopular when inflation has come down? Because it's still very high. Inflation is destroying the purchasing power of people's incomes, of what little savings they have. And that's only going to get worse. Stock market can always crash. I mean, it's very expensive. And so if it were just to revert to the mean, that's a big crash if it went there quickly. So it's always possible, but it seems unlikely because the Fed can always interfere by creating more money. And so we end up with a dollar crash instead of a stock market crash. And that's what I'm more worried about, is the dollar crashing, not the stock market. Because in order to prevent the stock market from crashing, they'll just print a bunch of money. And so it's the dollar. So the price of your stocks don't go down that much, but the value of the money that you get when you sell your stocks, that's what goes down.
Right.
Or the value of the dividends, to the extent that you have a dividend on your stock. Of course, a lot of stocks don't pay dividends at all. But those that do, the purchasing power of those dividends will be dramatically reduced, even if the stock doesn't crash. But the money crashes, so your dividends don't buy you as much.
Yeah.